Right then, so this is the US dollar analysis. We are bearish with respect to the day count and the market structure. So this is Tuesday, and we started off the day coming up above Monday's closing price. So we moved in on what has been developing since Thursday's highs as a bearish trend line. So we've come up towards that and topped out just below that 106.50 level and sort of halfway up really of last week's, no, bear with me, sorry, last week's range through that 61.8 acting as sort of a resistance area perhaps. We've got last Wednesday's New York session lows and Friday's New York session lows, digging into the majority of Monday's range and coming away from there. So well below Friday's closing price, that blue line. We're on the front side of the trend on the day. We've broken back below the closing price for Monday, the start of the week, which was in and around 106.12, and below yesterday's low point, 106.06, taking out the figure. And this is all on the back of coming up into a resistance area over here. We've been topping out for some time. This is a number of weeks of congestion. And we've just recently broken to the backside of the trend with this daily low. The higher low before the high of that bull trend, that cycle, was broken last Monday. And we've pumped up into the peak formations, potentially making the final peak formation of this consolidation. We've got 3 firm peak formations in place. And we're front side of that. We came up for the high of the week last Thursday. So day 1, day 2, day 3 of the day count. Monday was day 3, a day 3 continuation trade to the downside below Friday's close. That changes back to day 1. We're now on a day 2 continuation day as part of the 3-day cycle. So the bias is for a continuation to the downside. Now, we may have already seen the low of that continuation. I'm not suggesting that this is going to come much further. We've already done a fair bit of the average true range of around 60 points. We've done about 53 of those. So there is room for a continuation today, for the day ahead, for the New York session, so long as we stay front side of the trend that's been put in place on the day. Now we're chipping away at it. We could probably pull that in a bit. Now we're chipping it away at it here. We need to come down to a lower time frame, perhaps, just to monitor that structure. And let's see if we can zoom in on what the structure looks like. So the highest point really before we broke down was right up here, 106.14. So long as we stay below 106.14, we're technically still in a bearish environment. So as this price perhaps starts to move up, we're not bullish until we break above the closing price, and we'll mark that off as the high, 106.14. So this still has plenty of room to start forming a bullish structure, probably for a test of yesterday's lows. And if it fails there, then we'll be looking for bearish structure for a downside continuation. So as I said, we've done 60 points in any given day over the last 21 days on average. I'm just measuring the range. So far, we've done about 55 of those so far. So perhaps we'll have a move up, and if we get bearish commitments, we could have a fresh low put in for the day. If we start breaking up, then the thesis will be that we've already done the low for the day, and perhaps we'll have a move back inside on the day. And we could well finish, therefore, as a day that stays inside of the current range, but still it being a day 2 continuation day as part of the 3-day cycle. And this could be the low for the foreseeable future. And we might have a correction back up into all of this consolidation if we don't see a continuation to the downside and closing firmly lower that could set us up for a continuation for the rest of the week.